Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at LM Funding America.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave in the comment section below.
So let's get into the analysis.
Okay, let's unpack this company's story. It's an interesting one because it's not a pure play miner. It operates a dual revenue model, combining specialty finance with this rapidly expanding Bitcoin mining operation.
And what's so fascinating here is the strategic pivot. Starting back in 2021, maybe 2022, management really focused on Bitcoin treasury accumulation and building out their mining capacity.
So they get leverage in two ways then.
Exactly. It gives them dual leverage. They benefit from the mining revenue coming in day to day, but also from the appreciation of their digital asset treasury.
And that mining segment isn't just a cost center, right? It's not just something they're hoping will work out later.
Not at all. We're seeing that the mining operations are already profitable on an operating income basis.
Okay, so that's key.
It is key
Yeah.
because it creates a sort of self-funding mechanism for their long-term Bitcoin accumulation. It helps offset all that public company overhead.
Right. Which brings us to the balance sheet.
Cool.
So you connect the dots, that's where the story gets, well, really compelling.
The balance sheet tells an incredible story. As of late November 2025, the company held over 301 Bitcoin.
That's a huge asset base. What's the liquid value on that?
At recent valuations, that treasury was worth approximately $27.5 million.
Okay.
Now, that translates to about $2.25 per share. However, the stock was recently trading around, 99 cents?
Wait, so the liquid Bitcoin treasury value alone is more than double the company's entire market cap.
Exactly. The whole company was recently valued around $17 million.
So you're effectively getting the entire mining infrastructure and all that growth optionality for free.
For less than free, actually. That's where it gets really interesting.
It does raise a big question, though. Why the deep discount? A gap like that usually means something.
It does. It often suggests the market is heavily pricing in execution risk. Or maybe future dilution, which we should definitely talk about.
Okay, so let's look at how they're actually growing that mining business. They've been pretty active with acquisitions, from what I've seen.
They have. On September 18th, 2025, they closed a really accretive acquisition. It was an 11-megawatt mining site in Columbus, Mississippi.
And they paid how much for that?
Only $4.0 million. And they funded it directly from the balance sheet.
Wow.
This was a huge deal for them. It represented a 42% expansion of their total mining capacity footprint, basically overnight.
The kind of quick execution is impressive.
Yeah.
And did it actually improve their margins?
Yes, and that's the proof right there. We saw their direct mining margin improve sequentially to 49.0% in the third quarter of 2025.
48%.
Yep. That's up from 41.0% in the prior quarter.
That's a huge jump.
It points directly to increasing operational efficiency and, the low-cost power they're getting from that new Mississippi facility.
And they're not stopping there. What's next on the expansion front? I heard they're targeting something like 26 megawatts.
Correct. They're also moving forward with a 2-megawatt immersion-cooled expansion in Oklahoma.
And immersion cooling is a big deal for efficiency, right?
It is. It should increase their total hash rate by nearly 10% in the near term, continuing that scale up toward their capacity target.
So management sees this massive gap between the asset value and the stock price, and they're not just sitting on their hands.
Not at all. They've been actively, almost aggressively arbitraging this gap. They executed a pretty substantial $23 million capital raise back in August 2025.
And they use that cash to do what?
Deployed the majority of the proceeds right into Bitcoin treasury accumulation.
But the most bullish signal, I think, has to be the share buyback program.
I agree. So management authorized a $1.5 million share repurchase program in early November 2025.
It's a pretty standard signal.
It is, but here's where it gets interesting. They also used an $11 million Bitcoin-backed loan facility to fund an $8 million private repurchase.
Okay, let's unpack this for a second. They are borrowing against their Bitcoin holdings.
Their core asset.
To buy back their own stock at prices they clearly see as depressed.
It is a massive signal of insider confidence. And it's a commitment to increasing the Bitcoin per share for all the existing holders.
It's a very clear message.
Exactly. This is a disciplined capital allocation strategy. It focuses explicitly on that BTC per share metric. They're trying to magnify the Bitcoin upside while shrinking the equity base.
The story is really compelling, but I mean, every high-growth, high-beta company has risks. What are the key elements of the bear case here?
The primary risks are the common ones for the sector, but they're amplified here. The stock's beta is what, 1.85?
Which means it's almost twice as volatile as the broader market.
Right. So risk number one is just sustained Bitcoin price volatility. A severe bear market really impairs their asset value and, just as importantly, the collateral for that loan we just talked about.
And what about the actual financial performance? The gap numbers?
That's the other side of it. While the mining segment is operationally profitable, the GAAP results still show losses.
Big losses.
The trailing 12-month net loss is around $15.7 million. That reflects all the ramp-up costs, depreciation on the miners, things like that.
And there's also the question of dilution, which you mentioned earlier. That's a big concern given the recent capital structure.
That's risk number two, warrant dilution. The November 2025 warrant reset expanded the number of shares issuable to 15.5 million.
At a 97-cent exercise price.
Right. And while that reset might have signaled a bottom, it still creates a huge equity overhang that could pressure the stock if accumulation doesn't accelerate.
So what should listeners be monitoring in the short term to see if this thesis plays out?
The most immediate catalyst is the Q4 2025 earnings report. That should be out in late February or March 2026.
And that's the big one.
It's the big one. It'll be the first full report reflecting the operational contribution from that 11-megawatt Mississippi acquisition. We should see a material revenue and profitability improvement.
And on the operational side?
We'll be looking for updates on that Oklahoma 2-megawatt immersion expansion and, continued execution of that $1.5 million share repurchase program.
And, of course, the Bitcoin price itself.
Of course. Continued momentum, there would be a major tailwind for the entire treasury.
So speaking of forward targets, what does the consensus suggest for the upside if these catalysts actually happen?
The analyst price targets are generally pretty bullish. They're citing targets around $5 per share.
Which would imply,
Right.
what, a few 100% potential upside from where it's trading now?
Exactly. If the market closes that asset discount and starts recognizing the operational scale, the upside is significant. So LM Funding America really presents an interesting asymmetric setup. The valuation is so heavily anchored by the liquid Bitcoin treasury.
Which provides a margin of safety.
A huge one. And at the same time, you have these accelerating and highly efficient mining operations providing substantial operational leverage if the Bitcoin market stays strong.
This is a classic case of disciplined capital allocation meeting aggressive asset accumulation. Investors are essentially buying a leveraged exposure to Bitcoin.
With a management team that's actively working to increase the Bitcoin per share.
So the key takeaway for you is really to monitor that earnings inflection in Q4 2025. If that profitability accelerates like we expect, that discount to asset value could narrow really, really quickly.
That's all for today's analysis. If you enjoyed this analysis of LM Funding America, please subscribe and like this episode so you don't miss our next stock breakdown.